Hello, everyone, and welcome to a new episode of Redesign Your Life today. I'm Daniel Kobryner, I'm your host, and I'm a mental fitness coach. This podcast, it's about transformation. It's about guests sharing their stories, transformation, and what they do to contribute the best they can in this society. So today I'm very honored to have a very special guest with us. This is Jeff Glick. So today's guest sits at the intersection of finance, strategy, and entrepreneurship. With more than 2 decades as a CPA and fractional CFO, Jeff Glick has helped founders move from uncertainty to clarity, from survival to scalable growth. As a head of US operation of outsourced CFO, he's redefining what modern financial leadership looks like, leveraging technology, data, and strategic insight to transform finance from a back office function into a powerful engine for growth. Jeff doesn't just look at numbers, he translates them into vision, strategy, and real world results. His mission is simple but profound: to make finance accessible, empowering, and truly transformative for business owners everywhere. So, Jeff, you are very welcome again. It's great to have you here, and I would like you to let us, our audience, know about who is Jeff. What's your story?
Okay. My story is somewhat unique and somewhat not. I grew up in New York City in the Bronx. Parents didn't go to college, grandparents didn't go to college. Um, I did well in high school. I went to a good university. I was an accounting major. I worked 2 years in public accounting. I got my license. I was a CPA. Didn't really like that. Then I went into internal auditing at Merrill Lynch and kind of changed the trajectory of my life there because I learned, large corporate work. After that, I went to work for Solomon Brothers, which is equivalency now to any large Wall Street firm. I mean, gigantic. Um, I was a cost accountant there. I did one project for the right person. I ended up on the trading floor doing hedging analysis for our refineries, pipelines, gas stations, because we had gasoline, diesel, crude oil. So really learned a lot about trading and risk management. And that's just because I did the right project for the right guy. Um, then they said, "Oh, Jeff's a CPA, Jeff's internal audit. He knows what we do with our refineries. Let's make him a manager of M&A." So I basically traveled around the world doing M&A, mergers and acquisitions, for 5 years, and I got my MBA on the road. Uh, After that, I didn't want to travel anymore. Just had my first child. Let me say that my wife just had her first child. I was in the room, and then I was made, manager of operations for foreign exchange and precious metals trading. Didn't know anything about that, but they had faith in me, and I figured it out. And we were one of the largest traders in the world at that point. And so that was great. And then I got tapped on the shoulder, and we had this kind of funky joint venture at that point with the Russian Ministry of Finance. This is back in the Gorbachev Yeltsin era,
Mhm.
perestroika, and I was in charge of their operations for that operation. And we were selling 40 to 50% of the US supply of platinum, palladium, and rhodium going into catalytic converters in the United States. So we were big in a little market. Um, They tapped me on the shoulder. They said, "Jeff, we want to get out of here. We don't like the partnership. Would you like to be our CFO? And I was like, and they would 2x my base salary. I just bought a house, my first house, like anybody else, the first house you really can't afford. And we just had our first child. And I said, well, what's the worst that could happen? I'm a CFO of a $500 million company at 30. Really didn't know what I was doing, but faked it till I made it. And we left Solomon Brothers with a checkbook, metal, and a contract, but we had nothing. We had no internal controls. And the first person I hired was Ernst& Young, that they were our auditor for 16 years because we were trading on the mercantile exchange. We were trading with the largest automobile manufacturers in the world, GM, Chrysler, Ford, Mitsubishi, Toyota, Honda. We had metal in 4 continents, and we were one of the largest traders on the New York Mercantile Exchange, the London Commodity Exchange, the Tokyo Commodity Exchange. So we had a lot going on, and we had no infrastructure. So the good news is it was back in the early 90s where things were slower. No internet, so things were not as fast. It's not like today where you blink your eye and you're on QuickBooks and you're in business.
Mm-hmm.
Things aren't like that. We're not like that. So, but that was transformational to me. I was entrepreneurial. I wanted to do something different, and I didn't realize it's going to be that different. And it was a startup, and I was there for 16 years. We got it to about $2 billion a year in turnover. So we were also big in a growing market, a lot of responsibility. Some of it didn't know what I was doing until I learned how to do it. I learned how to network, how to build relationships, and that helped me on the next stage of my life. So in 2008, the crash came. This guy Putin comes along. He takes over Russia, kind of killed our business. So I had to do something for the balance of my life. I had kids about to go to college, just lost a lot of money in the financial crash. And so once again, I had to transform myself. I went into private equity, and I was CFO, chief compliance officer of a private equity fund. And that worked well because of my compliance relationships. Plus also I did M&A back 15 years ago. And I learned how to do it really well. And, that's what private equity is buying companies. And I led due diligence and deal closings and helping our portfolio companies, the smaller ones. And then I got bored again, and I had a kid in college, one going to college in a year, and I lost a lot, like 20-30% of my college savings. And I said, you know what? Let's go start my own business. And so I started a company called Start You Up, where we did fractional CFO and compliance officer for hedge funds, private equity, family offices. Um, I did these things called SPACs. I did 3 or 4 SPACs, special purpose acquisition companies. They were pretty popular in the 18s and 2018 and 19. Then they kind of fell apart, and now they're coming back stronger. So I was CFO of a couple of those, and it was a great lifestyle. I lived in a nice town. Kids went to college, grad school, med school. It all worked out really well for me. And then I got a little bored again. And then I went into solar energy for a while. I worked for a large developer. I just want to learn new stuff, maybe catch the wave or something. And then kind of didn't like that. And then I was introduced to OCFO, who I work with now. And they kind of took what I did as outsourced CFOs and took it to the next level, which I didn't do. And it's an exciting place to work. They've been in business for like 13 years. They've done almost 1,400 engagements in over 35 countries. And it's exciting. I get to work with small, mid-sized businesses. They're getting ready for their first material transaction. And that's what we do, and it's exciting for me to see people who, what they have internally got them to where they are, but they need a little extra to get them to where they want to go. And so that's what I'm doing. So my whole career has been one transformation after another.
Well, I mean, this is absolutely, you had so many different lives in one, Jeff. This is quite amazing. And it's so for people who are not so familiar with fractional CFOs, can you explain a little more about what it is?
Sure. So a lot of companies, they need to get to that next level, and they need to be bankable.
Hmm.
Will someone do a deal with them? Will someone lend them money? Will somebody buy them at the highest valuation possible? And what a good fractional CFO does is they make sure that they have policies, procedures, and internal controls, all the boring stuff,
Hmm.
that their financial reporting is timely, accurate, and consistent,
Hmm.
that they track key metrics and benchmarks, and their reporting is strategic, because you could lose 2 to 3 times or turns on your valuation. Instead of 10x EBITDA or net cash flow, you can get 7 or 6, because your accounting infrastructure or financial infrastructure is subpar. Because a lot of investors, they're willing to take risks, but not administrative risk. And that's what we do. And because of my many different turns in my career, I've seen a lot. People say I'm a mile wide and a mile deep on experience. I am the Swiss Army knife. So, and that's what we do.
Okay. No, thank you. And for instance, obviously, because it's fractional, so it's only a part of your day, your time, which you dedicate to these companies, if I'm correct. Yeah. So how does it work? Or is it like whole weeks? I mean, when it's a time fractional, I'm really
Right.
interested
It,
in.
it depends on what their needs are.
Okay.
And that could change. It could mean that they need someone to give oversight to their bookkeeping and accounting group.
Hmm.
Um, they know what they're doing. They've been doing the same thing for years. They track 3 metrics: cash, accounts receivable, and accounts payable.
Hmm.
And they're worried if they're going to make payroll the next week. But that's not what a good accounting financial function does. And that's how we help them. So it might be up front, you need to dig in, have a lot of meetings, and train and mentor their accounting group. So that might be longer. And then it might be, oh, let's put a budget together. And then let's do a 3 to 5 year strategic plan. And let's figure out how to track those metrics and hold people accountable and be a trusted advisor to management, the board, if they have one, and the cap table. And the cap table could be investors, banks, and partners. And, as a fractional CFO, depending upon the time that's required, you could have 2 clients, because each is half your day,
Hmm.
or you could have 4, or you could have 5. It all depends on their requirements. Some just want someone to talk to on a monthly basis. They have accounting, that's good, and the reports are adequate. And then but the owner or the entrepreneur just wants someone to talk to,
Hmm.
who doesn't have a vested interest in the company. They just need an advisor. A lot of times, an outsourced CFO, any CFO, you are that trusted advisor where you're going to tell that person the truth, even if it hurts. And especially in small, mid-sized businesses, the the entrepreneur, the founder, they have very, you know, accurate, professional acumen. They don't know everything, or worse, they don't know what they don't know.
Exactly.
And that's part of the job as well.
Well, actually, you know what? It just when you say they don't know what they don't know, I was just going to ask you from your experience, Jeff, what is the biggest blind spot most entrepreneurs have about their finances?
Well, a lot don't really understand what margin means.
Hmm.
A margin, if you ask a construction company or what's your margin? And they go, oh, it's 50%. I said, okay. And is that everybody? He goes, yes. Okay. What percentage is over 50 and what percentage is under 50?
Hmm.
What percentage is 75 and what is at 25? Who's the salesperson on the 25s? Who's the manager on the 25s? And they look at you like you're crazy because they didn't realize that you can allocate um, labor, you can allocate materials, and really look for, as I noted before, strategic reporting. If they realize that, oh, all the 25% gross margin is one salesperson, well, you might need a new salesperson, but tell that salesperson to charge more money. And if it's the same field management, well, maybe you need to give that field manager some extra training to
Hmm.
get their margins up because maybe they're not doing it the right way, they're not tough enough, or maybe they have poor accounting for labor allocations and materials allocations, and maybe they have materials that are walking out the door because they don't have an inventory system. So that the person wasn't trained to do this. That person might be trained in sales. That person might be trained in construction operations, and they didn't think of putting together a team to help them, or they didn't want to make that investment at that point. A lot of entrepreneurs, they're investing in intellectual property, new products, marketing, advertising, because they don't see the return on investment for a financial infrastructure.
Okay. Wow. Exactly. So, I mean, there's a lot people don't even realize. I mean, founders said, and you are there just to, I mean, already to provide a lot of insights on, how to break down the various areas in their business. And when we talk about new technologies, Jeff, I mean, obviously AI and everything about cloud tools are transforming finance now. So, what are for you the top technologies you believe that every growing business should be using right now?
Well, it depends on the business. There are tools for certain industries that are better than others. I just think you just want to make it so your people have tools to make them more efficient,
Hmm.
so you can get more out of them. It's not that you're taking away bodies. You're giving them the tools to make better decisions, to be more efficient, so they could take time to do more research and just be a better employee. But it's obvious, a lot of the stuff should be automated, like, banking, uh, and all that stuff, which is pretty simplistic to do nowadays. But someone
Hmm.
has to check and make sure it's right, make sure it's done correctly. Helping with putting together, estimates. You have to have the right tool that understands your operations. So yes, that they are helpful, but doing it halfway may cause more problems than it's worth.
Okay. Now, this is very, very clear. And another question I have for you is, there are a lot of founders which really chase growth, growth at all costs. So how do you help them balance ambition with financial sustainability?
That's when a budget and a forecast comes in handy. They
Mhm.
have to realize that there are ups and downs in their monthly cash flow. They have to realize that if they want to get to that next level, they need to fix certain things about how they do things to become more efficient. And or they might need to get an investor or maybe a working line of credit or something that's different, not what they're doing. If they say, I just want to, increase sales 3x every year.
Mhm.
Well, if you're in retail, you have to stock more inventory. It's going to cost you more in loans or working lines of credit. Retailers tend to pay slow, and you have to plan for that. And you need somewhat detailed plans to make sure that you understand what's ahead of you. Or if you want to go more into a direct to consumer, well, that's different unto itself because now you need to be the warehouse and you need maybe a third party person to handle that. So you might not need more lines of credit to handle the slow pay and inventory, but you might need a person to manage that third party inventory. So it all depends, but you basically have to slap them in the head sometimes and say, listen, yeah, all this is good, but how the hell are you going to do it? And we need to sit down and we need to talk through it. And, having a fractional CFO helps a lot because it keeps the total cost down, but you still need to make that investment. And I keep going, I'm hawking on investment. Outsource
Yeah.
CFO, better internal controls is an investment. It's not always an expense. And you might see the return in 3, 4, 5 years. It might not be a direct a return on investment day one.
No, absolutely. And actually about investment, because when some companies, for instance, come to you because they seek new investment, what would you say separates the companies which successfully raise capital versus the ones who don't?
I think being on both sides,
Yeah, yeah.
on the acquisition and the sell side, people invest in people
Hmm.
that they want something that's organized, unless you have some crazy good intellectual property
Hmm.
that it's going to take somebody years to duplicate because you develop the next sliced bread or the next cure to brain cancer or putting a man on the moon. You're doing it faster, quicker, and people are just want to buy your intellectual property. That's not the case usually. Usually it's you're in competition with other people, and if you can grow your business, that's what people want to see. But when people start doing their due diligence,
Hmm.
they want to know if are you a well-managed company? And this gets back to all the boring stuff, policies, procedures, internal controls. Do you have retention of employees? That's critical because that institutional knowledge is an asset to the company. Can you manage your employees well? Do you take care of your employees? Or are you just, employees come and go, come and go, come and go, and no one really knows what to do and can say, hey, we got a problem here. And it's not going to hit us in a month or 2 months. In 3 months, we'll be crashing down. We need to take some action today to stop that. And if you have a revolving staff you're not going to have that. So there are a lot of things people look for. Obviously, they look for, a recurring cash flow. They look at your insurance. You have claims if you're manufacturing. Do you have a lot of claims? Do you have a lot of people that get hurt? That counts too. So there's a lot of risk people look at. So people invest in people. What's your track record? How have you done? Have you had successful exits before? Have you helped drive innovation? And what's your core skill and talent? And are you a great manager? Are you hiring the right people? Or they might say, okay, yeah, we like Susie or Bob, but we need to bring people in under them. And that also affects the price you pay. So
Yes,
a
absolutely.
lot goes into it. Due diligence is pretty deep sometimes.
Yeah, yeah, absolutely. And what you said as well, obviously, the personality of the founder is very important, isn't it? I mean, I suppose even when you interact, I mean, with these founders there, I guess that, I don't know, has it happened that sometimes somebody approaches you for a role of CFO and you don't kind of relate to the person and says, no, I'm not going to work with this company?
Uh, it depends. Yes, some of them are potentially total pains in the asses, and it might affect our staff working with them.
Hmm.
You have to look at it. Yes, it might be a good account, but we also have to have people working with them.
Exactly. Uh-huh.
And it kind of goes both ways. And that also affects, now in the day where, there's Reddit, there's all these websites where people just complain about people.
Hmm.
And you have to be mindful of social media and also and everything else. So yes, when I owned my own business, I only worked with people who I liked because I knew I knew I was gonna be with these people for 5 to 7 years, and you become part of their business.
Absolutely. Thanks for that. And Jeff, I'd like to come back to something you mentioned before, when you were telling about your stories. Sometimes you change company and you use the word, oh, I was bored, I changed, right?
Yeah,
So my question is about how important is the sense of purpose generally in work?
I like making change. I like being involved. I like being at the table.
Hmm.
Now, some of the table I set myself, some of the
Hmm.
table I'm invited to.
Hmm.
But I just don't want to go into a job and just push numbers. And like, I'm an accountant. I wasn't very great at it. I was more strategic.
Hmm.
And for me, it was not fulfilling. For some people, dealing with numbers, they love it. They love it when things balance. They love it when their reports look good and they're sharp. And for me, I like reading reports and then let's go do something. Let's do something from. But you can't make those decisions without accurate, timely, consistent reporting. So garbage in, garbage out. So it all depends what you like to do. And I don't mind as you could tell, I don't mind the spotlight. Some people do.
No, exactly. And you see, it transpires that to really enjoy, new experiences, building businesses, really, even starting from scratch. And this is sometimes when we have it. Okay, this is the way we are. And
I
then,
mean, I built two businesses from scratch. I mean, my own businesses, the metals trading company, which wasn't easy because we were owned by the Russian government,
mhm,
but we traded with everybody and we had to do everything flawlessly. There was only one way to do our operations, the right way and early. And we had, big CPA firm. And when I started my business, people relied on me. As an outsourced CFO, you have a lot of responsibility
mhm,
because a lot of times the owner, he or she there racing around the world, they're doing deals, they're creating things, they're with their family, and they're trusting you to keep the home safe. So that's what I like to do too. I like being the trusted advisor.
Trusted advisor. Yes. I mean, this
Yeah.
is so important. And really thank you so much for, for your all your insights. And my last question would be in 5 years' time, Jeff, how do you see the role of CFOs evolving in small or mid-sized businesses?
I don't see it changing that much
Mhm.
because at the end of the day, you're at the table and you're working with management. You might need to hone your skills a little more. It might need to know more about AI driven models, AI driven efficiencies. But that's the same thing that's happened since I was an accountant. I mean, when I started, we were doing accounting on big green paper. I don't know if you remember those big green 20 column papers. When I started, that's and then you kind of grew, and then came Lotus, then came Excel, then came all the accounting software. So
Mhm.
every 10, 15 years, you had to adjust. Now you have to adjust every 2 to 3 years. So you can't be just putting your head down and say, who cares? QuickBooks, Zero, Zoho, and all the ERPs, but they change so quickly because of AI models. And you have to make sure that you stay above above or at minimum at the norm because people want to work with companies that are doing what's there today.
Yeah.
And you can't, you know, it's harder. It's a harder job. It's an easier in some parts and it's harder in other parts. Now, I mean, just technology is so fast and you have to stay up on it. And you have to know when to pull the trigger and when not to pull the trigger to do it. So I think and then there's, with AI, there's a lot of risk, there's a lot of corruption, there's a lot of, people putting in fake stuff,
Hmm.
and you have to build that barrier also. So it's just different. There's Everything is just different. And you have to stay up on it and hire good people, hire good people, treat them well, give them the opportunity out there. And just real quick, the most important thing I was told by the CFO of the group from Solomon Brothers I worked for. So Solomon Brothers was equivalent to Goldman Sachs.
Oh, yeah, yeah. Uh-huh.
It was, and the person who said to me, I did this project that got me on the trading floor, said, "You do the work, Jeff. You do the talking." That I'm not taking I'm not taking it on myself. You did the work. And that helped me say, I want to stay here. So just stuff like that really helps to build a team and to mentor people as well.
Well, thank you so much, Jeff, for sharing all your wisdom with, the entrepreneurs who are there with us today. And when people want to reach out to you, just perhaps to work with you, what's the best way?
Jeffrey, Jeffrey at ocfo.com. Or they could find me on LinkedIn but yeah,
Well,
Jeffrey, or go on ocfo.com and you can find any of us.
okay. Well, again, thank you so much for your
Thank you.
time.
Thanks a lot, Daniel. It was a pleasure. I really appreciate it.
Well, thank you so much. And thank you for our viewers who are with us. And I hope you got a lot of wonderful nuggets today about, CFOs, fractional CFOs, and what stood out as well is that this world is an ever-changing world. So we have to adapt, we have to be flexible, and most we have to look after our people.
Yeah.
So thank you so much, and see you everyone at the next episode.
Take
Bye-bye.
care.
Bye-bye.
Be safe, everybody.